Hey traders, this is Christian from it's Tribeca Trade Group, and today's video will be on getting set up for next week. What we saw that was really aggressive in option flow last week, and then just to talk about the overall market and just a little bit of a feel. And whenever I have put out a video that's on option activity, and I usually do these on the weekends, which is more of a summary of what we saw last week. The major thing here is not just the trades that go up on the tape. I think there's a lot of people at this point who are tweeting about option activity. This is really only a fraction of what trading is about. Just watching aggressive call activity is not going to make you into a profitable trader. There's so much more than that, and a lot of this we go over in the trading room: how to manage trades, how to manage your risk, and really looking for signals, not just in the individual names that we see, but also just in the overall market and what's going on. So really getting a feel for that. So I'd like to preference that. Also Friday was option expiration. What I tend to do is look at the positions that expired in your account on Friday for monthly option expiration. Generally, how I think about this is if I have a lot of positions that expired worthless, I did not have such a great month trading wise. Forget about P&L, but just if you have a ton of positions that are left at expiration that were swing trades where you took a decent let's just say it, you took a decent swing on, you had a decent investment, and if those expired worthless, you're doing something incorrectly, right? So what I like to say is if you had like one or two positions, or even zero, you did a good job. Let's say 0 to 1 was a really good job. If you have 3 to 4 swing trade positions that you left expire worthless, probably not such a good idea of managing your positions. So again, these are all things that we talk about in the trading room, and how to get away from that where you have a lot of positions that expire worthless. That should not happen, and that's something that you want to analyze and figure out what you did, what had you screwed up. Everybody has a bad trade, and it's how you respond when something does not go correctly. So just that's a couple 2 minutes on that. Just a little bit of, but again, it's much more important than just going over some charts on some names where we saw aggressive option activity. So that's paramount to what we're going to go over. And again, you have to be in the trading room for me to kind of go through that and go through some examples, while we're doing it, right? While we have positions on and we're taking targets and so forth, why we're taking targets or why we decide to take positions off. Okay, so number one, I thought really interesting for what has transpired in the last couple weeks. So just remember, about 2 weeks ago, we saw a lot of volatility, not just in the VIX, which I know everybody looks at is the VIX. And again, the VIX is not a fear index. It's just a measure of short-term volatility. People like to say, oh, it's fear, but it's really not. It does what it's supposed to do, and it measures short-term volatility. What we saw a couple of weeks ago was the BXN had a lot more volatility to it than the VIX. The VXN, if you're not familiar with it, is basically the VIX for the Qs. We got all the way up to about a 20. And what we did in the trading room is we really analyzed when this thing, I did not want to add positions while the VIX is going up, while it's flying high. Once it starts to come in, that was kind of my green light. And I was looking at a particular level in this where I started to really add positions. So we took note of aggressive option activity in things like, in some of the tech names like Salesforce, Take Two, Baba, which I got out of because I didn't like how it was kind of turning. But there was a whole slew of tech buying that was a good signal. And the other part of that is you have to kind of look at the overall market. You have to say, because if there's still major selling pressure going on, it really doesn't matter just because there was an aggressive call buyer in Take Two. If there's a bigger seller who's selling everything, your little Take Two position is going to get crushed, right? So what we want to look at is what the overall market, and if the volatility is really high, or the volatility is starting to come out. So this was a really good signal. Notice we've gone from 20 all the way down. So really quickly we've gone 17, 15, just in a matter of about a week and a half. We've gone from about an 18 all the way down to like an 11 here. So really, and again, the purpose of this is to kind of realize where you're adding positions. You want to be adding positions not at the top of the market, right? So we can look at this and it's kind of inverse to the Qs, and we could say, hey, the Q's made a 52-week high. Do we really want to be adding a lot of risk here? Now, there's some good things going on here. There's a brand new bullish crossover here, but do we want to be adding risk down here into support or into resistance, right? So at this point, I think you should be managing your positions, your positions that you put on here, letting your winners run. Taking off some targets, but letting your winners run, but certainly not like putting on a whole bunch of new, fresh positions. I just don't think. I think it's more optimal to be doing it here versus here. I think you're chasing a little bit, even though we have a brand new MACD crossover in this. So who knows how high we can go. You follow the trend. Notice how far we are above the 50-day moving average, the purple line, versus where we were here. So it's not like you have to get out of everything. But really what we did in the trading room was add a bunch of tech positions a couple weeks ago, a little bit into last week as well, where things really were aggressive. We didn't see, like, going into the semis. Semis took a little while for, they have not shown a crossover yet, and it was kind of a little bit uncertain whether this was going to go back and kind of touch into here. Look at the volume, by the way, on Friday. Of course, it was quadruple witching on Friday, so a lot of trades that had to be done. That will always happen on quadruple witching. You'll always see more volume, but man, especially the end of the day. I don't know if you guys noticed this, but look at the volume at the end of the day in the semi ETF. Millions upon millions of shares traded. It was like 5 million shares, I think, traded right around within the last 10 minutes of the close on Friday. So yeah, I mean, the majority of that volume all went up on the close. So pretty crazy stuff that happens on these quadruple witching days. And especially as ETFs get bigger and bigger, there's going to be more and more volume on these days because of these rebalances. But anyway, that was really good. And that's, these are the things that we look at. In terms of overall sectors, so again, I'm going to get into some charts, but just to kind of look at the overall breadth of the market, it's very, very strong, and it's been this way now for the last 3 weeks. Going back about a month ago, 2 months ago, you had about a handful of sectors that were underneath maybe the 50 and the 100-day moving average, one or two below the 200-day moving average. You almost have a full participation rate. The only names that are not above the 50-day moving average is some of your defensive areas. Telecom, which has been below the 200 for most of 2017, below the 200-day moving average, and utilities also just kind of moved below the 50-day moving average on Friday. Again, this is non-dividend adjusted, so just bear that in mind, just so you could see what I'm talking about. IYZ is the telecom ETF. I think it looks pretty ugly, and it's a space to avoid. Below the 200-day moving average, sure, it could catch a pop when valuation gets really cheap, but why bother with this group? I would say we did see some call buying in like AT&T and Verizon. I don't know. A move up to the 200-day moving average towards the end of last week. Again, I think there's just, for me, better areas of the market. You could see that XLU, we'll see. We'll keep an eye on what the utilities do, but they did break below this 50-day moving average. Again, the purple line on my charts. But really, what I want to show here is just, XLK technology is now back on the top of the leaderboard. It was financials for a couple weeks. We saw a lot of inflows into financials. I think it was about $2.9 billion, and then a little bit of money coming out. Keep in mind, how hot this is right now. I would say we're running really, really hot in terms of inflows. I know there's some, I don't know, call it a little conversation about what's going on with mutual funds. I try to, I actually was tweeting to Zero Hedge because they were not putting out appropriate numbers. So they were talking about big outflows in mutual funds, and then they failed to mention how much money has been going into ETFs the last 2 weeks. There's been $24 billion that have gone into ETFs, and that's just the last 2 weeks. So that's a lot hotter than average. So is this a cause for alarm that we're running that hot with money being deployed into the market? Just going back to what I was saying with the Qs and with the volatility instruments, yeah, I mean, I think we're running a little bit hot. We're if you look at the RSI for the SPY, yes, we're a 73 RSI. We're overbought. This is, again, for me, not really the place where I want to be adding a lot of risk. I want to be riding, riding the trend and riding some of the positions that I put on the last couple weeks and taking some risk off a little bit. So, and shortening up the duration of my trades a little bit. Maybe doing a little bit more day trading if the opportunity, if the opportunity presents itself. So that's just a little feel. Again, when we're overbought, to me is not the right time to be adding a ton of swing trades on. And again, especially when there's been that much capital that's been going in, it's kind of like a little bit of a contrarian feel, right? When people add that much money, how much more money can be added the following week? It's tough. It's tough to say. So just going through the sectors, just like I talked about with that sector scorecard, technology after taking about a 2-week hiatus. And some profit taking, all saw the biggest inflows of any ETF last week. Again, keep in mind that these numbers, if you read on further through my note, I talk about quadruple witching. The flows are always every time there's quadruple witching, when indexers rebalance their portfolios, there's more inflows than normal this particular week. So that's the third week of December, March, June, and September. It happens. I basically just copy and paste from my September newsletter. What I say every quarter around this time is that quadruple witching has a big effect here on the week's flows. So you have to kind of take that with a grain of salt for this week. In international ETFs, I've been spending very little time here, and just when I talk about fund flows, because it's been very quiet. The majority of the action has been coming in domestic ETFs, not so much international. They did pick up a little bit. The previous week it was flat. Last week they caught $2.1 billion. Again, a lot of that going into developed market ETFs. So areas like Japan and Europe are seeing those. Those ETFs are EFA, VEA, and EFV, which is value for developed markets. Brazil, Japan, emerging markets also saw a little bit of money. Emerging markets has really come in from where it was about a month ago, when it was seeing about $800 million to $1 billion was the weekly clip for about 2 months. So that's really trailed off. They're still seeing inflows, but just not nearly as much. China actually saw a little bit of outflows this week. All right, so I talked about this in last week's newsletter. An ETF to keep your eye on that's maybe probably a little bit off most people's radar is this IGV. This is tech and software, so it's not your FANG stocks, right? It's your Adobe, your Microsoft, your Salesforce. I put last week's chart on there just to talk about the setup and what I was looking at, and notice what we've done since then. So nice move into value, and we just have that 52-week. Sorry, no, I keep wanting to say 52-week MACD crossover, which is also in the Qs as well. So a lot of strength in tech. Buyers came back into it. And then a couple other groups to look at because once I go over the aggressive option activity, I'm going to talk about being diversified as well here. But REITs, they actually look interesting, maybe for something more in cash, considering they have a nice dividend yield to them. And then a couple areas in international groups. Look at Greek, the Greek ETF, forming basically an inverse head and shoulders here and making a move back above the 200-day moving average. Pretty interesting little move here. Something that you may consider in cash. It's a $10. It's a $10 ETF. So I think that looks interesting. Also on the international front, Brazil has been flirting with this 200-day moving average now. Had a nice inflow towards the end of last week. I would say if this reclaims the 50-day moving average, that purple line for confirmation purposes, might be interesting. Also on the international front, something that I thought was interesting that happened on Friday was there was a big put buyer. This is an ETF that I was long, and I decided to get out of because this was actually swept, these puts, February 56 puts. $430,000 print. So if it was something really small and far out of the money on the put side, I would probably ignore it. But this was pretty close to the money and a decent trade. So being that I'm still waiting for a little bit of confirmation, I decided for the time being to get out of the China internet ETF swing trade, and just wait. Wait a little bit to see if I get the confirmation that I'm looking for, which is a move above the move into the value area and move above the 50-day moving average. I don't care. I could be a little bit late here, but that big put buyer. I also didn't like the price action. We'll kind of see what, it's Sunday, so we'll see what China does this week. But I didn't really like what happened in the Hang Seng towards the end of the week. It kind of struggled a little bit. We had a couple, days where it moved nicely, but then we ended the week and it was down 1%. So it's just one day, but I didn't like how it was heavy under pressure and everybody wasn't really paying attention to it because of the tax plan in the U.S. As well as quadruple witching flows as well. But the price is a little bit cheap in the Chinese internet to the Hang Seng. This is a relationship that I continuously look at. But anyway, we'll see. If China is very strong in the beginning of the week, and we get a little bit of confirmation in this group, I will look to go long. The other thing is we've been seeing some call buying in a bunch of different names in this group, and I'll talk about those in a minute. YY and JD.com. So I was a little bit overweight this group, and again, that's just my portfolio. Somebody asked me towards the end of the day on Friday, hey, why'd you dump this name? And I said, well, with a big put buyer, I'm a little bit overweight as it is, China. So I've got a few different things on in this group. So I said, you know what? I don't need to be that overweight if we're seeing some put buying in the space. So another group to watch. So quietly made a 52-week high, and there's a bunch of these, by the way, that you could look at. But the aerospace and defense made a nice 52-week high very quietly. Made a nice 52-week high. I'm long Raytheon RTN as my North Korea hedge. Just to get into a couple of individual names, this is one that we had in last week's newsletter that I'm repeating. That's Intel. Just kind of, you had to be patient with this one and just hoped that it didn't break the 50-day moving average. You almost had a crack here, but we stayed with it. I stayed in a long swing trade. And what I decided to do is, because, again, this is, I talked about in the beginning of the video, managing trades a little bit better. I particularly don't want any January exposure right now in terms of options. So I was sitting in a January option position, and it was kind of getting a little bit long in the tooth. Thankfully, I got this big pop as we saw repeat activity towards the end of last week. So now I want to manage this trade. So I got out of I was looking to pare down risk a little bit on Friday. So I got out of my Intel swing trade. I will look to reestablish it next week. And perhaps if we get a little bit of a fill, an inside day here, it might set up nicely for me to do that. And again, that was January, so I'll be looking to do something further out. No MACD crossover, but soon. So I'll just touch upon, if we go to the beginning here, I'll hit technology first. Ooh. Because we did see, I try not to be biased with putting this list together, but it just seems like we saw a lot more trades, a lot more, what I'm looking for is aggressive trades. I'm not just looking for blocks of option activity, but something where they're more aggressive. They're sweeps. It's where the institution is paying above the ask. They're sweeping all the exchanges. When I used to make markets, I used to do that. When I used to put up very aggressive trades where I needed a little bit more room to hedge, I would basically put the trade up maybe a penny above the ask, and that would be a sweep, right? That's Reg NMS makes you do that, and the trade gets marked as a sweep. That's more aggressive than someone printing something mid-market. All right, so I'm just pinpointing those trades. So we talked about Intel. Let me just talk about a couple semi names that we saw towards the end of the week. So I do have these listed in my charts, and I'll go through these. Sorry for the scroll. But analog devices. This was another trade that I took. Just not something that we see a ton of activity in. So something different. And a sizable trade. And take a look at what they were doing. Oops, let's go through the 5 days. The first thing that we saw was they were put selling, and they did this on Friday as well. So they sold a lot of the January 82.5 puts. That was Tuesday. That was both Tuesday and it was Friday that they did that. Now maybe they took this trade down. I'm not sure. I have to check open interest because it does look like it matches. So they may have went ahead and bought those back. the puts that they sold. Either that or they increased, they doubled down on their trade. So we'll see. On open interest, unfortunately, does not come out till Monday. But what caught my eye, so we noticed that, and then on Thursday, there was a nice call buyer, and that's where I got into that trade. So I took one target on Friday in analog devices. But again, I like the support of the 100-day moving average. It held, it just wasn't really doing much for about a week or so, and price moved out of consolidation. So at this point, need a little bit more further. Friday, this happened midday. There was January calls bought, and I'll show you again, another name that we just don't see a lot of activity in. I think it was just about 1,000 of these when you add up all the volume. But again, look at the conviction. They're going in the money, 175. Oh, actually, this is a little bit out of the money, but pretty expensive trade. 475 is what they paid for these. Also 460. Again, look at the premium. It's not like it's a $50,000 trade. It's a $380,000 chip that they're putting down in terms of premium. So again, it almost looks like that ADI chart. A little bit of consolidation in here below the 50-day moving average. So I did not take this one because at this point I have a decent amount of exposure to tech. So and that's a question that you have to ask yourself, right? When we saw that pullback 2 weeks ago in tech, I think a lot of people were overweight tech and they got pretty beat up. So going back to up here, again, sorry to scroll, but just because we see however many trades this is in tech, I would just be aware, cognizant of how many positions you have in tech, because if we happen to get another pullback and you're sitting overweight this whole group, you're going to have a kind of a mess on your hands because you just can't get out. It's different than it was like years ago. That tech sell-off happened so quick. There's no way that you can get out of these. If you've got 7 or 8 positions on in technology, the best you could do, which I know people are a little bit reluctant to do right now, is to buy puts. But the best you could do is buy Q's puts. There's no way you can get out of all these names, and they're all going to get. You saw what happened a couple weeks ago. As a reminder, is you got hammered in all these names, and it happened within like 2 hours. If you got up from your desk and you went to go get lunch or whatever, all of a sudden it happened already. So that's how quick this stuff can happen. So just a reminder, you want to keep these things in the back of your mind, that a more diversified portfolio can weather a storm better than being completely loaded up in one particular group. It's the same thing, like you see this on Twitter. A lot of guys are in tech, they're in biotech, and they also own the biotech ETFs. I mean, you have to be out of your mind to load up that much in one particular group. It's just way too much risk, in my opinion, right? I could only tell you what my opinion is, but to load up like that in one particular group, you're nuts. So to me, it's the same thing with energy, right? We saw a lot of call buying in energy a couple weeks ago, and it kind of got a little bit quiet. So I've got a couple trades on. I've got OAH on. I've got Oxy on. And that's it. Like, just because we see a whole bunch of call buying, it doesn't mean to get overweight. It just means I could participate in a couple of these names. Because if you look to see what the worst performing group was last week, it was energy. It was XOP. Oil and gas was down 3.3% last week. So I don't want to be, so I did probably lose a little bit of money on those 2 energy positions, but it's not going to make me unprofitable for the week because I've got a couple positions on in energy. So again, this is so much more important, I think, than just watching call activity and just blindly following call activity, right? It's all about your trading system. All right, so a couple other groups that we saw call activity. The gamers, I put this out on Twitter. This was another group that looks like it caught momentum a bit. And we caught a really nice call buying like down here in take 2. And so look at the move it's made. So it's made a move all the way up until the bottom of value to resistance. So it's got to get above 112. And I will tell you right now, I'm 90% out of my take 2 position, right? I'm going to let that, if it happens to get into value and it happens to rage on, excellent. But, going from 102 to 111 in such a short amount of time, I'm perfectly happy with taking some really healthy profits and moving on. EA has been another name that we've seen all kinds of call buying in. I'm still long EA. It finally got above the 200-day moving average. I'm hoping that this thing can get going, but I'm in a June position. I'm not in a January position, so I've got time to kind of finagle that trade a little bit. And again, if it doesn't work right away for me, there's time. All right, a couple Chinese internet names. JD, really exciting about this name. I mentioned the Chinese Internet Group and the put buyer in KWEB, but this is really, I think, a nice setup. You got to move above the 200-day moving average. I actually sent out a trade idea video on JD last week. So downward trend line, we're now above it, and you've got your defined support here of the 200-day moving average and this downward trend line. If it happens to do what it's done before and stalls out and breaks down, you're dealing with what, $1 loss here. That's it, as long as you're disciplined. So, let's see what it wants to do. I will tell you, most of the call buying that we saw in JD was short dated. We saw one longer dated play, but again, most of it was either December positions or December 22nd positions. So you have to be careful with that short time stuff because they're not putting down a big chip. They're kind of looking for momentum. So it's right at a pivotal point here. And this one will definitely be on my radar for next week. Another one that we saw was YY, which again hasn't done what I wanted it to do yet. This was where we saw the YY call buyer, and it kind of failed here. Now it failed, but it hasn't gone anywhere. So I would say kind of incomplete story. We don't know what's going to happen. If it starts to break below the 20-period moving average, get out. That's what I will be doing anyway. But what I'm looking for is price to get above right around 111, call it. Right. So that's another China internet name. Another one that I have my eye on is Baidu. Not a name that we've heard a lot about, but you can kind of see it's got a similar. I don't know why that didn't work, but let's see if I could just quickly draw that. Drawing tools, and I want to draw a trend line. So if we go from here to here, this one I think is not complete yet, but it's just something on my radar. Again, really haven't seen too much call buying in yet, but you got this downward trend line. It needs to break, and it needs to break into value. Then I think it gets interesting. A couple other names that we saw call buying in. Twitter, really nice looking chart in my opinion. We'll kind of look at this on a longer term chart. That's why I'm using Bloomberg. But great move the last couple weeks. We did catch one day where there's of course M&A speculation, which is not really why I want to be in the name solely. But again, look at the 5-year chart. Look at the base this thing's been making. So I think with this one, you just give it, make sure. Again, in my opinion, January options, what's the point? This has been a long base. Maybe it takes a long time to get back above. So make sure that you have the appropriate trade on here. Are you looking for a couple day bounce, or are you looking for this to kind of retrace some of this long base that it's making? For me, as long as it's above, let's say, the 50-day moving average, I want to let this thing go and see where it ends up going. I'm not in it for quick momentum. A couple other names, IBM. I always will have a couple counter trend trades in here. IBM, I will say I did get into an IBM position last week, and I didn't like how it was the worst performer of any tech name on Friday, so I got out of it. It also broke the 200-day moving average. So that's, for me, I'm not happy that I took a little bit of a loss on this position. I especially just missed a target on this day, which is very frustrating for me. But it is what it is, and I want to follow my system. My system is better. I feel I'm much more confident in my system than any individual pick I have, or any call buying that we see on the tape. So if it happens to get back above the 200-day moving average, so be it. Then we could re-examine. But it failed, and that's it for me for that one. The best thing I could do right now is monitor it. So if it does get above the 200-day, I can reassess and think about going long again. But don't like to deal with something that's the worst performer in tech on a day when tech rallies. So again, on the radar, Skyworks, also another Another tech name where we saw longer, I think it was May call buying in this particular name. So again, a lot of tech buying, and in different areas of tech. Some semis, some gaming stocks, some Chinese internet names. Another name which I think is pretty interesting if you're looking for something very speculative is XNet. This is a Chinese name, another name that's rumored to be in blockchain or cryptocurrencies. I would watch this top of value, which is right around 1850. Notice it's a $15 stock. In my opinion, no need to mess with options in this name, where the implied volatility is going to be super, super jacked. Okay, what else we got? A couple names in biotech. It appears that they did come back into GBT. They did buy a little bit of puts before they announced the secondary, so someone was pretty clever with that one. PRGO, Mylan, UNH, Clovis, I thought was interesting, but it's so far out of the money in Clovis. You have to really kind of examine some of these trades that go up. Clovis, if I could show you this, the trade that we saw. Let me go to 5-day. So important to kind of monitor. I can't even find it actually. Important to monitor. I think it was the June 80 calls that we saw, or sorry, January 80 calls. You want to be mindful of just how far out of the money that they're buying these. There was also a buy rate that went up. I think there was also these January 70s that went up. But yeah, I think this was the trade that caught my eyes. But again, if you're in January, just to kind of give you an example, look at how far this is. 70 strike is up here, so you need a big pop. Now, I don't know if Clovis, sometimes these names do it. Sometimes they have a drug announcement, or they have a study that comes out and the name just flies. We've certainly seen that happen in a number of names. But if nothing happens, it's an awful lot of premium to invest. $2.45 for something that's just a month away. So you basically need 72.5 for this stock to get above 72.5. You're talking about about a 10% move, an 11% move, something like that. So you need a really big move in a short amount of time period. I think there's better opportunities than buying front month. You could do something like a call spread and go out a little bit further. But I think investing, unless you know something, investing 245 for something that expires in a month is tough to do. FCX, how can I not mention this name? This was a huge winner in the trading room. At this point, trim and trail. Just a huge breakout. They're still buying this name. They rolled a big portion. What caught our eyes on this one was all the way back in here. They bought a huge, huge block, and I think I can find this because I think it's still 10 days away. But they bought these December 22nd calls. These are the exact ones that I got into for 27. I think I actually bought them for 28 cents, so I paid a penny above. I mean, these things, they sold these things in FCX for like $1.50, I want to say. So an absolute home run. Let's see if I can find the closing print. I think I got to go 5 days. 5 days. December 22nd. Here we are. $1.33 they sold them. So in at 27 cents and out at $1.33 in about a week's time. Unbelievable trade. So what did they do with this position? Did they completely take it off? No, they're still long, some of them. They originally took off the whole thing and then they rebooked the trade. As you can see, it's marked late. But they're still in it, and they've been buying January 5th calls, and they've been buying January calls. Those went up on Friday. They bought more. They bought more FCX going up. One thing to note here. So again, look at the move. So it's if you haven't heard about FCX, I would say very, very tough to get into it now. Most of traders in Tribeca Trade Group got in when I did, when the stock was around $14, and it's moved up to 17. So I'm basically 90% out of this position, and I'm trailing a small position left, even though they're still buying calls in it. So I think at this point you could do a couple things. And what I did with my December 22nd position was I rolled it out, right? I rolled a small position out to January. Now you can think about if you want to roll out a little bit further. I'm also still long in cash because there's no reason for me to take that cash position out unless it breaks something, right? Using more of a trend philosophy. The other thing to notice is what copper has been doing. If you remember back on December 5th, we had this big ugly red candle. Look at what this has been doing here. So real nice day on Friday. I know a lot of people were looking at other things, but look at the move in copper towards the end of the week. Now back above this level, so pretty impressive looking. A couple other names to go through. I'm not going to go over all those biotech names, but PRGO, Mylan saw a nice call. I think there was calls versus puts that went up. A couple of these crypto names, which I will be giving a cryptocurrency webinar on Monday, talking about how you can play some of these names. Financials were pretty light. I actually threw in a trade because I thought it was so light. We saw some Citigroup calls. We saw the usual BAC, very momentum like where they buy like weeklies or next week's calls. So not really like a swing trade for BAC, more city, but there just really wasn't a lot of either industrial or financial really aggressive trades. There was a couple, and I had to double check my list. There was a couple infrastructure plays or material name. Guess I have. Yeah, infrastructure. I think this serve you put as an infrastructure play. Also CC. This is a name that they went out to January 2019 and bought a nice healthy block of those calls. So that's it. So that's a healthy name. The object is to put like 100 names on your watch list. It's just too many to manage. You have to ask yourself how many names that you can try to manage. The object is to put a couple names on your watch list and again, not get into every name, but wait for when we see that like repeat activity and you're like, oh yeah, I remember we saw a whole bunch of call options in Shack. They're buying them again and the stock hasn't done much, right? To me, that's a better signal than putting like 100 names on your watch list and trying to get into every single name. There's no way that is going to work well for you because you just can't manage every name to the best of your ability than having on a handful of names. I didn't touch any of these consumer names. So just to kind of touch a couple of them, Shack I think looks interesting here. We saw a lot of call buying all in here. Notice it's come in a little bit. So you've kind of had a chance to let this thing rest a little bit. You could either try going long versus this support, and if it ducks below the 5-period moving average, which is the yellow line, then maybe you get out of it. Or you could wait for repeat call activity. But I think it is decently off that high, so you're not quite buying it on this. But again, just like we were looking at in Twitter, a real nice defined base that this thing has been in and is now moving. So these names that haven't done anything for a long time and begin to move can really be persistent and continue to run. They have a chance anyway to do it. So finally, the last one I'll talk about is a name that reports, I think, on January 5th. This is Constellation Brands. I like this. Just had a 52-week. Again, I keep saying 52-week. Just had an MACD crossover. So pretty fresh MACD crossover, and I think has a chance to run into earnings. A lot of call spreads that were purchased. So again, it's a pretty when you go right around the money because it's a very high price stock. Obviously difficult to own straight up. So this one options fit a little bit better. And they bought the 230, 240 options one day strike for a call spread. They also bought the 215, 230 call spread on a different day last week too. So I like this name. I think it's a premier or it's a better name in consumer staples. Constellation Brands are in the beverage name. I think they do really good. I think their management does a great job. So these are the types of names that I would like to play for a breakout. Names that are really strong, not your weak names that, like Teva, for example, we saw a whole bunch of call buying, finally got off the lows. Do I want to hold Teva long term? No. So something for a bounce you could play for like a quick trade, but like this is a name that I would want to play, I think anyway, for a long swing. All right, so that's the video for the week. Have a great week of trading, And if you want to check out the Tribeca Trade Room, I will provide you with a trial. Just go ahead and email me or send me a tweet on Twitter @cfromhertz is my handle. Thanks for watching and have a great night.